There's a little bit more room at the back there if you want to kind of just squeeze in. Everybody kind of come to the front. We can probably get a couple more people in here. So I have 7 minutes apparently, so I better get to it. Yeah, I'm Richard from Fabric. We've been around about 10 years backing founders and projects in the space. And we're kind of about 25 people, and I'm probably the worst person to be talking to you about this particular topic, about payments, because I generally find it extremely boring. And that's even notwithstanding the fact that I've actually been involved in trying to build some stuff in this space. And obviously it's a very critical part of the whole original Bitcoin thesis. So I couldn't resist putting this in here, because this is about payments, and it's going to be 7 minutes, and this is the cold cut remix of Paid in Full. Who knows this track? Anyone? Come on, you're not that young. 1988, 7 Minutes of Madness, Paid in Full. I expect you all to go and look it up immediately after this. Here we go. So nobody wakes up in the morning thinking, nobody says, wake up and smell the Bitcoin. They say, wake up and smell the coffee. You get up in the morning and you want to go do things. You want to pay for stuff. You want to live your life. But it's not about the payments. It's about the actions you want to take. And if you take those actions and you come from a good context and you work real hard and perhaps you can get a little bit of credit for all of that, that can lead to great things. It can lead to houses in Malibu on the sea. These things, that great cup of coffee, I had a kind of not so great cup of coffee just now, but then great houses by the sea. This is what it's all about. It's not about finance itself. But finance has become an absolute behemoth over the years. This is actually a slide that I presented about 7 years ago about the transition of the kind of most valuable companies of the world from the kind of oil barons and the banks to the new kids on the block from Silicon Valley. And I guess you could say that was the beginning of the shift to kind of wrapping TradFi. Got to click in the right direction. TradFi, which to some degree had us in a state of slavery. The institutions were the ones in power, not the individuals. But it was really just neobanks and stuff with a bit of a wrapper around TradFi. They're nothing revolutionary. DeFi has given us something truly of a breakthrough nature. It's given us something that is making that pendulum swing back from the institution to the individual. And from my perspective, and this is a kind of little micro thesis here, the direction of travel of that is to move beyond DeFi to what we call NoFi. The idea is that finance, payments, credit, and so forth should just be fully in service of what you're looking to achieve as an individual and individuals within a collective, not a kind of an industry in and of itself. I'll try and explain what I mean by that. You like the picture of radical freedom up there? It's not me. So why are we not there yet with kind of this shift towards from DeFi, which is still kind of nascent, to NoFi? Well, it's still too costly, we would argue. The integrations to really make sure it's interwoven within all of the applications that are being built today as software continues to romp through the world and eat it up, are not quite ready. Critically, the data that surrounds your transactions and your everyday activity, the metadata is still not there. So let's look at it. We've got a benchmark here for TPS from Visa. The only one, I'm wearing my Near kit, my Near swag right now, as well as being managing partner of Fabric. I'm also on the council at Near. It's the only one there that has broken through that kind of Visa threshold in terms of TPS. And so whether it be the transaction throughput or the cost, we're not there yet with what is demanded from people primarily transacting, let alone obviously in this world we're moving to where it's mainly machines that are transacting with each other. So still a ways to go. The second bit, and I'll start with kind of a quick anecdote about Stripe. Anyone here worked for Stripe? That's good, so you can't fact check me too much. But bottom line is when people were looking to invest in Stripe, a lot of VCs said this is a terrible idea. Payments, basically work. They're basically pretty cheap. And that's a business model which is just a race to the bottom. So why invest in that? And it turns out that actually it wasn't about just reducing the cost. That was my point one. It's actually about how you could, use APIs and embed it into better user experiences and workflows within e-commerce and marketplaces and so forth. And actually, so that was the point and the value of Stripe. And we're also already seeing in the DeFi world, and there's an app called Cosmos on the Near blockchain actually, which is outstripping Stripe. It's got 1/25 of the cost of Stripe transactions. That's good, and can be embedded programmatically into other apps, and hopefully that'll improve over time. But by and large, all of these different types of integrations, even though there are some many major players who've delivered some of them, you can see the names of Solana, Circle, and Gnosis and so forth up there, they're still immature and they're still being rolled out and there's still bits missing. The third area I mentioned was data. At the end of the day, you want the transactions, you want the kind of question of someone giving you credit disappear into the background. And you can do that on the basis that you're willing to give up the data about what you're looking to buy. I heard a little chat earlier on about stablecoins and talking about different credit profiles for an individual user who's pursuing two different activities. There's a lot of complexity to understanding the credit risk attached to a certain person. But there's a lot of data that is available. And so we're seeing on this slide what it's meant to represent. We're starting to see a shift of a lot of opportunities to capture data on-chain through some of these burgeoning on-chain social networks, which is great. And then gradually we're seeing a shift to, in some sense, harness some of the frameworks of GDPR out of Europe to give people comfort about how data is going to be used, and definitely harness the power of different forms of encryption to give people comfort in sharing that data. And I think if we're going to make these very complex intermeshed networks of data operate, both to give us comfort with what data we're sharing, how those networks are governed, and indeed how we're going to take that data and use it to deliver meaningful credit scores or other applications, we're going to see a lot of agents that are going to be distributed across these environments going forward. So all of that is still a problem and still to come. So where we think it's shifting is to sub-zero costs for transactions, because you'll effectively be paid to transact because you're actually giving up your data. Infinite composability. I mean, I've gone here for as much hyperbole as possible, but that there are many running, live pools of user liquidity and user data appropriately anonymized that can be brought together to compound each other's value in the way in which they're integrated. But what we've listed a little bit here from sort of Fabric's perspective of some of the things that are coming down the track and some of the things that are still yet to be built. We're still waiting for proto-dank sharding down there. We're still waiting for really effective orchestration layers for these different bits of DeFi application capability. And as I said, we're still waiting for things like properly KYC'd and identified users within the DeFi environment so that we're all comfortable giving out the data and doing credit scoring. So it really was never about the payments. It really was only ever about the data in our view. Gradually the whole notion of just finance itself will hopefully, thankfully, sink into the background. And where we think this takes you is on another step on the path to not extreme sort of financialization, but tokenization of all of the assets that are out there. In that direction of real-world assets being brought on chain, and the ability to continuously auction them, set price in an increasingly perfect market, and marketplaces that will essentially instantiate sort of on the fly as needed, and marketplaces that are, and people have been describing these in different ways, they're kind of headless or leaderless marketplaces and platforms, because actually the platforms are formed from the people operating between themselves, as I said, kind of spontaneously. So it's kind of inverts the whole model from where it was before. So Meta is not the platform, Amazon is not the platform, the people are the platform. And then who's heard of Glenn Var's book, Radical Markets? So we think it takes us, another step in that direction, which is obviously a pretty fundamental shift. And then we think it's a fundamentally good shift, that if we get closer to that perfect market, closer to the ubiquity of the invisible hand, sort of gently kind of cradling the world, we can have a kind of a more equitable, inclusive, and prosperous and open economy for the planet. Thanks very much.